Well, Christina Romer, chair of the Council of Economic Advisors, told the Economics Club of Washington yesterday that we are no doubt in for more turbulent times. Well, do today's job numbers actually change her mind? Lizzie O'Leary is at the White House, the chairwoman. Lizzie.
Hi, well, Betty, that's right. I am with Christina Romer, the president's chief economist. So I've got to ask you, better than expected number. I know you don't want to read too much into that, but the trend, certainly if you look at the past few months, is a lot better. Have we turned a corner?
What you said was exactly right. It was, I guess I'd describe it as the least bad report we've gotten in a long time. That's a big difference from a good report. But I do like the trajectory, the idea that we're seeing these job losses go from 750 to 650 to 550, and now we're down here at 250. That definitely is a trend I'd like to see continued.
I've got to ask you, I know a lot of people are going to hit on 9.4% unemployment. 422,000 people left the labor force, though. So is that the driver for a lower rate?
It is certainly sort of arithmetically why the number went down. I think the way I would interpret it is basically we're seeing the unemployment rate. It certainly has been stable, really, for the last 2 months. I wouldn't read too much into a tick up, a tick down. The labor force does move a lot from month to month, so, but basically what we're seeing is stability.
I want to ask you, you mentioned yesterday that you thought that the president's economic policies, your economic policies, have made things better, that the stimulus is working. But a lot of people say, well, wait a minute, that based on what? The estimates that we're comparing this to are estimates that you and Jared Bernstein wrote. So walk me through the math.
It's actually great, because one of the things I tried to do yesterday was to go beyond what Jared and I had done. Rather than to just say we spent this much money, we think it made this many jobs, is to say, well, let's do some projections just based on past history. What would you have thought should happen to the unemployment rate? What would normally have happened to GDP growth? And showing that we were definitely doing better than normal history would have projected. So that was one way we did the calculation.
Well, then I have to ask you, because in those initial projections, you had unemployment topping out at 8%. Obviously, we're beyond that. You seem to leave the door open yesterday to a second stimulus package. Do we need that?
You know, we obviously have a $787 billion stimulus package, of which about $100 billion of that has actually gone out the door. What we're focusing on is doing that well, getting that out. And what I said yesterday is, like a good doctor, we're monitoring our patient, and we're going to see if we get the results we anticipate, and that's where we're headed.
Switching tack slightly, we've just got 30 seconds left, but over the weekend, a lot of members of the economic team made it sound like the president might be open to raising taxes. Is that a shift in tactic? Is that a trial balloon that we're going to hear?
What we have been saying all week is nobody is talking about raising taxes on middle-class people. As these numbers suggested, as the number we've had suggested, we're still in a recession, for heaven's sakes. What we are concerned about is the long-run deficit, and we're in the middle of health care reform. Nothing could be more important than to do that right.
Is there a way to lower the deficit without increasing revenues, though?
If we certainly slowing the growth rate of health care costs, the number one thing that you can do to help the deficit.
Fair enough. Christina Romer, thank you very much. Betty, this was Christina Romer, chair of the Council of Economic Advisors. I'm going to send it back to you guys.
All right, Lizzie, thanks very much.